Mr. Devraj. He is the founder of Grama Vidiyal, which is one of the largest microfinance companies in the country. And we are here really today because we are both delighted to share with you the news that we consummated a share purchase agreement this morning that would allow IDFC Bank to acquire 100% of Grama Vidiyal Microfinance Ltd.
Sorry, what's the name again?
Grama Vidiyal.
Grama.
Gramavidiyal. Based out of Trichy. So if you let me make a brief statement, then we have enough time for you to ask questions, and Mr. Devraj is here to help me answer all the questions that you have, and he obviously will tell you all that you need to know about Grama Vidiyal.
Vidiyal is a Tamil word, and its connotation in English is dawn.
There you go.
Early morning, yes. Dana. Dana, the rural poor is.
So Grama Vidiyal.
Grama Vidiyal.
Right.
Dana, the rural poor.
Okay. So just to give you a quick brief on this, this is to my knowledge an industry first where a bank would acquire in this manner a microfinance institution. The nature of the transaction is that in a short period of time, Grama Vidiyal would become a dedicated BC to IDFC Bank and a 100% subsidiary of the bank. What is the logic for this? Well, the logic for this is actually very compelling. We'll hear from Mr. Devraj in a minute, but from IDFC Bank's perspective, this is an extraordinary platform that Shri Devraj has built. It has 1.2 million customers, and it has an asset book of over 1500 crores. 1500 crores of assets under management. It has 319 locations, current branches, and it is spread across 65 districts.
Yes.
Of Tamil Nadu
and 7 states.
And you have how many employees?
3,000 employees.
3,000 employees. So from the bank's perspective, this gives us an extraordinary reach in a very short period of time to a very large customer base. It creates a platform for growth for our retail banking business. As you are aware, and I shall reiterate it, it is our goal as IDFC Bank to build a mass retail bank under 5 years. So to become a mass retail bank, you need to cater to the mass customer segment, and this is a very important step in that direction for us. So that's a very brief introduction. I'd like Mr. Devraj to share with us a little bit about the history of Grama Vidiyal.
Good morning. I started Grama Vidiyal around 20 years ago. It was initially a trust, and then 10 years back we converted it into Microfinance Limited, got the RBI permission, and we ran the Grama Vidiyal Microfinance Limited for the past 10 years. So we slowly grew the outstanding as well as the clients. Initially it was just 1 lakh or 2 lakh clients. Now almost we are 1.2 million client base with 319 branches. Also the outstanding is around 1,500 crores. And most of our operations are at the rural. We work in Tamil Nadu mainly, as well as Maharashtra and Madhya Pradesh also. Kerala, Karnataka and Pondicherry, we have small presences, but these are the main 3 states where we have our bigger presences. So more than this, anything that you want to ask?
So just to add to what Mr. Devraj just said, now you imagine a banking operation that begins to work in tandem with this franchise. So today, Grama Vidiyal is primarily about making micro loans to a very large community of customers. We intend over a short period of time to introduce now the full range of banking products to 1.2 million customers. So right from a savings deposit to other types of loan products, and the expectation is that in doing so we will create a very powerful banking franchise in a mass customer segment. This, as you can imagine, also ratchets up the pace of IDFC Bank's nationwide presence. So with this acquisition and collaboration, IDFC Bank will have a very significant presence in the south, and we can work together to extend that reach in other states as well. So that's for the introductory statements. If you have any questions, we will be happy to take them. Introduce yourselves so that I know who we are talking to. So the value you will have to discover for yourself. All I can tell you is that it is a compelling transaction which will be accretive for IDFC Bank.
And we have also a committee now. Could you share with us the kinds of cost savings that you could see in the coming quarters, considering there would be certain synergies in the southern region that you just spoke about, and that is an important region for you as well. So what kind of cost synergies do you expect in the coming quarters?
So we have in one fell swoop, we have now a customer base of 1.2 million people, which otherwise would have taken a long time to build and a significant amount of investment for us. So the savings for us is clearly in terms of time, but also in terms of cost, because the organization that has been built is an extremely cost-effective, extremely powerful organization that brings down, enhances the efficiency and brings down the cost of distributing financial service products right to the last mile.
Any liabilities that you will be taking on with the transaction?
So yes, so what will happen is all the liabilities of the company will transfer systematically over to IDFC Bank, so that at the point where the acquisition is completed, all their liabilities will be subsumed under IDFC Bank.
What would be the size of the liabilities that you would be taking on?
So it's commensurate with the size of the assets. So it's about 1,500 crores is the size of the liabilities.
So it is a cash transaction or you're paying by stock?
It is a cash transaction.
And how much would that be?
So it is an accretive transaction. I don't wish to disclose it in the public domain at this point.
But will you?
Sorry?
It is a listed company. Or you are a listed company.
So you will get it from the site, from SEBI site. If I have to make disclosures to SEBI, you will get the valuation.
What is the NPA of the microfinance institution, and what are the spreads and margins?
Now our recovery rate is around 99.9%. So there is no non-performing asset from our side.
What are the spreads?
The spread is said it is around 12%. 12% is the spread.
It's like any microfinance business. So the spreads are very healthy, but the operating cost.
Why will you keep it a wholly owned subsidiary and not merge the books?
The books will be merged. The books will be merged, but the banking correspondent cannot do any lending business or any banking business. So the virtue of this transaction structure is that the entire operational infrastructure that has been created in Grama Vidiyal remains intact and does not require any intrusive kind of merger or integration of the kind that would be involved in a traditional merger, right? And the assets and liabilities transferred to the parent balance sheet. So in some sense, we get the best of both worlds. It becomes a much easier collaboration to make work quickly at scale without having to worry about quite in the same degree of the various aspects of a full merger would require.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.